Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, clicking on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Saturday, January 29th, 09:14 a.m. New York time. This past Wednesday, the U.S. Federal Reserve released their statement that they're leaving interest rates unchanged, and that's just what they did. Look at here at the U.S. Treasuries first, and then we'll go into the currencies. There's a correlation of currencies and interest rates. We're looking at the 30-year U.S. Treasury, and short-term, or short abbreviation of the 30-year U.S. Treasury are bonds. Yeah. So not all U.S. Treasuries are referred to as bonds. If you hear that, someone's giving you bad information, walk away, run away, turn that channel off. Yeah. 30-year U.S. Treasuries are bonds. We closed green for the week. Made a higher high, higher low. They're trending up off the bottoms. Interest rates and bonds go in reverse. So if interest rates were going to be going higher, this would be trading down. You see the correlation? Yeah, they trade different directions. So if this is trading higher for the week, higher high, higher low, and closed above the prior week close, then again, your interest rates should be either left unchanged or going lower as these go higher. My thought is, well, we're doing a retracement. And that retracement, I'm looking for the opportunity to trade bearish. Another word for bearish is trading short. So I'll be sitting in my hands, waiting for the setup, and then be doing that. I've done that many times past year and this year. Now we're looking at the U.S. Treasuries, the 10-year. They are called notes. Look at that, red for the week, higher high, higher low also. So now we see the shorter duration from what 30 to the 10, same thing, higher highs, higher lows. Again, when the Treasury is going higher, the yields go lower, and yields and interest rates correlation because yields and interest rates go the same way. Now we look at the 5-year. The 5-year Treasury is also called notes. Where here we closed red for the week. We did make a higher high and a lower low, closing back inside that range for the prior week. So this is reacting faster than the 30 and the 10. Let's go look at the 2-year. Again, 2-year being notes. Red for the week, higher high and lower low, closing below the low of last week. So that's totally different than the 30-year. Got it? Big difference. Big difference. They're reacting much faster. So that's saying they expect something to happen sooner than later. There's not a correlation of them all going the same. Look at the last 2 candles of each one. The 30-year, last 2 candles green, and then again, the last candle, higher high, higher low, trending up. The 10-year here, last candle, last 2 candles. Well, the last one was red again, higher high, higher low, both those trending up. Shorter duration here, the 5-year, yeah, closed red and below the prior week body close, where the last one here closed red way below the low of the prior. Reactions different. Again, majority of volume trades occur on the 30-year here. So let's go look at the US dollar. Typically, when the interest rates get raised, it strengthens the underlying currency. So for the US, that underlying is the US dollar. Yep. And also, US dollar is one of the safe haven currencies. There's 3 safe haven currencies that are most widely known: US dollar, Japanese yen, and Swiss franc. When there's fear and people want to hold on to currencies, one or all of those, they often go purchase. They switch out their currency. So here are the US dollar, green for the week, higher high, higher low, all-time new high for the year. Outstanding. All-time new high for last year. I already labeled the midpoint. So here is the beginning of the year. We were trending down. Look, trending down the first 2 weeks. This red candle here, this red candle here, we're trending down, lower highs, lower lows. The past 2 weeks ago, we had that inside candle, potential reversal, and that's what happened. We had a breakout to the upside. So good job if you use that as a trigger and went bullish, trade long as soon as we took out that high. It's a trade idea I share so often. Yep. Okay, economics. Stronger US dollar makes it more expensive for other countries to purchase our products and to import them. Makes our currency stronger, cheaper to buy other products. Enough said on that. If you don't know that, go back to school 101 or call out your school for not informing you that. Cryptocurrency, Bitcoin, the most popular cryptocurrency. For the year, here we were, low, lower high, lower high, lower high, lower lows, low lows, trending down. Yes, it closed green for the week, and it closed way above, off the bottom of the low. Still, the trend is down, nearly at the low of last year. Yep. So again, the US dollar is outperforming Bitcoin. So if you're buying Bitcoin on the dips as it's declining, you're losing. If you're buying the US dollar as it's breaking out new highs, you're winning. Cryptocurrency goes both directions. You don't just make money on the upside. So if you're not bullish, but again, most cryptocurrencies don't let you trade bearish. So how do you get around that? You say, bye-bye cryptocurrency exchange, and I'll trade other financial products. I can trade either direction. Let's go look at the major pairs inside the US dollar. And we're going to look at them in the futures market. Yep, you can trade currencies also in the futures. The largest currency pair in the US dollar is the euro. Again, weekly candles. So for the week, the euro, new low. Took out the swing low there too of the US dollar. Again, euro is bearish against the US dollar. Japanese yen, the second largest currency in the US dollar. Yeah, it's red for the week to make a higher high and a lower low. It's also an acceleration phase. Here, this red candle is the low of the year. So being this acceleration phase, there's still a lot of people holding on to Japanese yen, maybe for fear, I don't know. But again, they're holding on to it because we're in this consolidation phase. We're not trending. This is a trend. This is a trend. This is a consolidation phase. So we're building a staircase pattern. Yeah, we're either going to go lower low or break out of here to the upside. We'll find out. Time will show us. And British pound, the third largest currency, US dollar. Red for the week. Lower high, lower low. Also new low for the year. Took out that low, that green candle. So we had a consolidation here. The second and third week of the year. Inside candle, broke below that. Again, that was a trigger to trade bearish. We took out that low of the inside candle. And we did a deep retracement, So because we did a retracement at 0.618, this is a Fibonacci tool. And that deep retracement means probability is that when we go back up to the upside, we probably won't take out this swing high. If we were to take out the swing high, be short term and then roll over. So again, now we have the British pound against the US dollar. We're looking for that setup and then the trigger to trade bearish. Got it. Canadian dollar. Huge sell-off for the week. Yep. Right into that demand zone of buyers. And Paul's there. That's good. Again, it's still weak against the US dollar because it's declining. Swiss franc, another safe haven currency. Huge sell-off. Yep. We broke below the demand zone. Demand zones are where buyers are. broke below it, closed below. That's even more bearish. So that means likely people are not going there for a safe haven currency. But Japanese yen we saw was looking more of a safety currency on the technical charting patterns. Interesting. And the Australian dollar, huge sell-off against the US dollar. Broke below the demand zone, closed below it, it's bearish. Yep, new low for the year. Huge sell-off, yeah. Lots of problems for the Australian currency. Remember, Australia, New Zealand, Canada, along some other countries, specifically those three I'm mentioning, those are heavily commodity-based countries. When commodities go higher, they make more money. If the currencies are going against them, that's not good. You expect when commodity prices are going higher, you expect those countries' currencies to go higher. Well, the inverse is happening here. Interesting. That doesn't happen too often, and that's something to be concerned about. Okay, now we're going to look at the currency pairs against several majors. First, we'll look at the euro, then yen, and the British pound. And we'll look at several currencies in each, but I'm showing them in the Forex market. Again, currencies also trade in the Forex market. The futures market, the Forex market are different exchanges. Understand that. The futures market, US futures market, offers a wide variety of financial instruments. That's awesome. The Forex market offers only currencies. Yeah, you might have a Forex broker that gives you opportunity to either see data or trade gold or crude oil. That's fine. Again, that's because they're paying for that data from other exchanges. The Forex, again, I'll say again, is only currencies. Doesn't mean your broker is not letting you data or trade other products. I had someone say that Forex is commodities. I said, no. I showed them the source and they were shocked. But again, you don't know what you don't know. Enough on that. Okay. We already mentioned here at the beginning, we already spoke about the euro US dollar. I showed you that in the futures, that the euro is declining against the US dollar. Now we're here looking at the euro yen. So up top left would be the symbols. First three letters represent the stronger currency, and the second one the weaker, just by pairs. But that's not the correlation with the trend, okay? So the euro, first three letters, followed by the three letters Japanese yen. But here we have the euro declining against the yen. So the yen is gaining strength this year against the euro. Very interesting. Yep, all this is selling off of euro going into the yen, coming into this demand zone where buyers were. And so euro is poor performing against the US dollar and the Japanese yen. Now we got euro pound, huge consolidation. Yeah. Again, euro was stronger here last year, and then it was losing against the British pound. So the British pound also beating up the euro. So the euro is losing. It's a loser currently. Euro Canadian dollar. Wow, interesting. Swing low here, yellow horizontal line. We took it out, rejected and closed above it that prior week and this week. So I'm going to take this swing low. We moved it. So even the Canadian dollar, buyers are stepping in here, holding this up, and that's giving favor to the euro. But if this declines lower, that's stronger the Canadian dollar. So there's a big fight there. Wow. Excuse me. I apologize. Now we'll look at the euro Swiss franc. We saw the Swiss franc was declining against the US dollar in the futures market. But now looking here, the euro Swiss franc, also the Swiss franc is declining against the euro. But here, because the first three letters euro followed by Swiss franc, that means when this declines, the second three letters are gaining strength. So the Swiss franc is gaining strength against the euro. So again, the takeaway is the euro is getting beaten up. I would not be buying the euro against any currency I showed you so far. I'll be trading bearish the euro. Okay, here we go. Euro, Aussie dollar. We saw Aussie dollar was losing against the US dollar. And now here we see the euro dollar is going higher. So that means if it's going higher, that's in favor of euro. Yeah. So the Aussie dollar we saw is getting beat up, and they're still getting it beat up even by the euro. But again, I'm still not looking to be buying the euro. Okay, remove that swing high. We took it out. We tested the midpoint of this huge candle. We didn't close above it. Nope, we didn't close above it. So let's update that too. Go all the way up. That's fine. Yep. So come see what happens come the new week if we're going to close above here. But again, the Australian dollar is even worse off than the euro. And that's showing right here because the euro is gaining strength against the Aussie. So neither one of those currencies I'll be going bullish, euro nor the Aussie. So now we'll go on to the second largest pair in the US dollar, the yen. Again, we'll be on the Forex pairs. Already spoke about the US dollar yen in the futures market. Euro, yen, we already spoke about that. British pound, yen. Again, here, first three letters, the pound, second letters, the yen, second pair, yen. So that means when these prices decline, that's in favor of the yen. We're here when this was going up last year, that was in favor of British pound. So we got British pound, yen declining, giving strength to the yen, safe haven currency. Remember, we saw the yen gaining strength, not so much gaining strength, but in a consolidation against US dollar. So possibly, and this candle, this past week closed inside this candle and a huge tail on the bottom. We might have a potential reversal. Yeah, watch that Japanese yen for potential bullish trades. Canadian dollar, Japanese yen. Very interesting. Remember, Japanese yen is the safe haven currency. So we have declining prices here. That means the Canadian dollar is losing, Japanese yen gaining strength. That's giving another signal. Okay. Yep. Let's label this. That was an impulse move up. And two safe haven currencies, Swiss franc, Japanese yen. Declining prices because the second pair shows is JPY, the yen. That means because this is declining, the yen is gaining strength against the Swiss franc. Well, that's interesting because again, they're both safe haven currencies, but the Japanese yen is doing better. Aussie, Japanese yen, no surprise. This is declining, giving strength to the Japanese yen, coming into swing point two, potential reversal. And let's look at the last pairs, the British pound. We already spoke about that British pound, US dollar. British pound, yen, we already spoke about that. Euro, British pound, we already spoke about that. And there's correlation here. Not correlation here, sorry, interesting. This high here must have been a bunch of traders or orders sitting on there because when this ran up and tested it, massive sell-off. And that sell-off extended it all the way to below that body. Still in consolidation. We didn't take out the low of this year yet. But again, this declining, which is again giving strength to the British pound. Declining because the first three letters are euros. So with this declines, that's in favor of the other letters on the right. Let's label that to potential swing point or breakthrough right there. British pound, Canadian dollar. This past week, lower high, lower low, trending down, giving strength to the Canadian dollar against the British pound. British pound, Swiss franc, big reversal. Even though we had a lower high, lower low, closed green, way above the close of the prior candle, giving strength to the British pound. And British pound, Australian dollar, no surprise. New high, higher high, higher low. This is in favor of British pound with the first three letters on the pound. So when this goes up, in favor of the British pound. Yep, Australian dollar getting beat up. So we took out that swing high of last year. Look, we took it out. We moved this swing high now. Outstanding, strong like bull. All right, please share a like below and subscribe if you haven't to my YouTube channel. Appreciate it. Thank you.